Dr. Narayan, just wanted to come to you with respect to the kind of knee-jerk reaction that we're witnessing on the markets. Do you think that it's warranted, especially given the fact that most of the global markets have also tumbled? So in comparison to that, how are the Indian markets looking?
Well, you know, it's not knee-jerk that we can put it when we see it happening across several days, right? One day's movement down is knee-jerk. But clearly the market is, being driven by whatever news. We are all reading the headlines and getting scared by it, right? So this is welcome to the 21st century. I think what people are now more afraid of are not about what they can see right now happening, but it is more about what they are not able to see and what will be the new thing. You know, for most people in the world today, a world which is not ruled by America, Europe or Japan, a world which is adrift and, which is what is something which seems to be a reality suddenly. So I think that is what people are more afraid of, and that is why you're seeing this major reactions across the board. You know, the Middle East falls and the Southeast falls and then Europe falls and America falls. Europe is into a never-ending set of problems, and we really don't have any solutions to all this. So I think knee-jerk is not the word I would actually attribute to this. This is, I think, people responding to global headlines and network. And fear is what is really driving the markets down right now. But at the same time, if I have to make a macro statement about fear, I would quote some person out of the US, I don't remember his name, who said that the most bullish factor in the market is always fear and the most bearish factor in the market is always certainty. So right now there is high levels of fear. So I think sooner or later this fear is going to run out, and that will actually prove to be fairly bullish. It may be from a trader's perspective, may not be from a long-term investor's perspective, but then fear is sort of bullish at least for the short term.
So, Dr. Narayan, the point being, forget what individual stocks or the index might do in a day or two or the next 5-6 days. What's your prognosis right now? Say over the next 3 to 6 months. Devin mentioned that he believes that there could be some return of the foreign money capital as well into India. Do you believe there could be some stability at the current levels, or you think we are headed for more downside?
If I see the charts and if I look at the price cycles and the time cycles, I feel that we are going to remain in a repressed state till about sometime around October. I don't see a major bottom being formed yet. I mean, even if you take the current bottom, the momentum on the downside is far too high for whatever low we make right now to be the absolute bottom. So we'll have a bottom here, when fear becomes excessive. Then we'll have a rally, but I think that rally will be only a cathartic rally to this, let's say, excessive downside. So I think all this will take a little while for it to play out. So maybe we have a lower low in August, followed by a rally, yet to be followed by yet another low, maybe lower, maybe sort of a retest of the same bottom, maybe a slight higher bottom. But then I don't see the markets really going up in a significant manner across about a 2-month time frame or even a 3-month time frame. So August, September, maybe even into October. I think that's the time the market will have to spend in trying to build a base so that it can launch an upside later. So for the next 2 to 3 months, I would say that any rally that you may get will have to be treated as only a bounce, and we're not really yet maybe finished with the declining sequence. I think that's because there's too many things flying around right now in the air that people have difficulty in dealing with. So this will always keep the market under pressure.
But just looking at the charts that and the way some of these stocks have moved over the last 2 or 3 sessions, the near term probably points towards more downside. Where do you see some support levels, if at all, or is it difficult to define a support level for either or any of the benchmark indices or large caps in a market scenario like this?
Well, you see, volatility has this incredible ability to smash any of the levels that you may put in front of it. But then what you have to see here is that, this is about what, 7% in the US and about 5-6% in our markets. So this is almost like a 3 sigma event, right? 3 standard deviations being knocked out, you have stocks on sale. So at this stage, you don't really expect that volatility will expand even further. So I think we are reaching a point where maybe the 3 standard deviation situation would actually start to kick in, and then you might have some cooling off. So we could put down some sort of numbers and expect that they will hold. I think on the Nifty, I would say 50-50 is what I had as the first level of support. We have hit about 50-57. So I'm happy to look for support areas around this. And now the key point is whether we define it at 50-50 or 5,000 or any such number. We don't look to put in all in terms of buying the market at just one point. This is a volatile market which will act, which is, let's say, a high momentum market on the downside. So we should actually look to build a position across a range of prices, not at a price. So I would say start from about 5,050. I think you have a price gap left long time in the back at about 5018. So I expect those gaps actually function pretty well when you trade down into them. Below that, you have another gap at about 4965 to 4980. Now, those numbers might sound a little scary, but it's not necessary that the market has to actually trade down into them. I know there are people who are actually calling for even more dire levels, but I think I would take it slowly because of this thing that I mentioned, that we are at maybe 3 HD levels already. So I would expect that there will be a cool off, there will be a small rally, and if those levels are to be seen, I think we will visit them later, not immediately. So I say 5,050 down to somewhere around 5,020 is where I would expect the market would slow down, try to find its feet again and try for an upside rally. But then the upside rally, like all of us agree, would be something of a slightly muted affair, not far too much on the upside. So I think at the most sort of optimistic level, I would put it at 5,300.